safe and sound in their home. I hope you have plenty of food and plenty of toilet paper. Uh, we are, like I said yesterday, and I hope that you guys got a chance to hear from David Chatham yesterday. It was just a really cool time to hear from somebody that we don't get to hear from very often. And, the purpose of these kind of conversations that we want to have at 2:00, and the plan is to do these 2 or 3 times a week. The purpose of these is inspiration. The purpose of these is, let's hear from people we don't always hear their story, and let's get different perspectives. And at the end of the day, what I hope that this does is help us go deeper into relationship with some special people that we have the pleasure of being in business with or doing business with. And man, we've just got some tremendous people. We've our team leaders who have stepped up in such a remarkable way have been lining up people, and I'm excited to share with you guys what that looks like moving forward. But we're calling this GLG Leaders because everybody that we're talking to, we consider leaders and are leaders. And today is another one of those, James Williamson, who is with Shelter Home Mortgage. And we all have seen James before. We usually see James standing up and giving us, some sort of an update on the lending industry. And I want us to do that. I want James to pour into us and give us the latest updates. But then the most important reason why I wanted to have James on was because I wanted you to hear of, his stories of overcoming adversity, whether it was from the last shift or just challenges that he's faced in his life, because we're all in this together, right? I definitely think there's solidarity in all of us overcoming obstacles. So James, first of all, thank you so much for being here. And thanks to Wendy for helping you and me. She helped me too do some troubleshooting on tech today.
Yeah, we both need a little tech help at the end of the day today, I think, I'm afraid. But thanks for having me. I'm honored to be here. And after the guests that you've already had, it's been awesome to watch those interviews. And I'm honored. Thanks.
Oh, man. No, you're awesome. So tell us what's going on. What's the latest? We're getting daily updates on this coronavirus situation. How's it affecting lending, and what do you think we need to know right now?
Yeah, it's fluid. We're getting daily changes. It's reminiscent of 2008 timeframe, and some of the changes are reminiscent of some of those changes too. But I made a few notes. Let me just tell you what I think you want to know and need to hear. Let's start with rates. Rates have been on a yo-yo. It's been crazy. It's been a wild ride over the last 2.5 weeks. They seem to have normalized this week, and I hate to jinx anything here, but I think the Fed making an announcement on Monday that they're going to buy unlimited bonds was a big development. There was a lot of uncertainty going on in the market. I think that was a big deal. We've seen rates stabilize a little more this week. It's not traditional stabilization. It's still on a day-to-day basis going up and down a little bit, but not like it did the previous 2 weeks. I think it's because of the decision that the Fed made. We're seeing the 30-year down kind of roughly in the mid threes at this point. Products, it's been a crazy week for products. The non-QM industry collapsed at the beginning of the week. I mean, literally, it was here one day and it was gone the next on Monday.
Tell us about the QM. For those who don't know, what does that mean? What does that stand for, and what does that mean?
So QM stands for qualified mortgage. And coming out of the Great Recession, the government, through the Dodd-Frank Act, created the CFPB. And the CFPB came out in 2014 with the definition of what a qualified mortgage is. And it did away with a lot of the toxic features that affected or believed to have affected the Great Recession. I heard David mention yesterday, go watch The Big Short if you haven't, or if you need to, your memory jolted on what happened a decade plus ago. So QM loans don't have an interest-only feature. They don't have a balloon feature. They don't have an amortization over 40 years. They limit the debt ratio to 43% These are some of the features of qualified mortgages. So this non-QM industry basically evolved after 2014. It really picked up a lot of momentum over the last couple of years. It's a product that our parent company launched a couple of years ago and has done well with. There's a number of players in the industry. Angel Oak has probably been the leader in the industry. And these are specialty products that allow, on a jumbo loan, the debt to income ratio to go over 43%. They're going to allow the credit to be a little bit below the standards that we would normally need. It was believed that it was going to become a more prevalent part of our industry moving forward, up until a month ago when all this started happening. Fannie Mae and Freddie Mac were going to be recapitalized, and there was going to be more emphasis on this product line. So I think really the theme here this week that we're really seeing play out is anything that's risky, anything that's believed to be risky, is getting thrown by the wayside. And so non-QM is riskier.
So it tightened up everything in terms of mortgage standards.
It did. I'm gonna give you a few other examples, but literally this one, the non-QM was here one day and gone the next, which is kind of a scary thing. We saw that with subprime back in 2008. That part of the industry was going and blowing. We started seeing some signs of weakness, and then within a day or two, it was gone. So some other things that have happened this week, jumbo right now is on shaky ground. So jumbo is a loan amount that's greater than 510, 400. Excuse this little cough that I'm going to have as we go, but jumbo's on a little bit of shaky ground. There's a number of lenders in the marketplace who can't do jumbo for whatever reason. We still can. We still have at least 5 different investors, and they're big names like Wells Fargo and JP Morgan and others that you would know that are backing these, and they say they're going to continue with them. But the market's shaky enough now that if something else goes, it's probably going to be jumbo. Purchase money seconds are a good alternative to jumbo, which means a first and a second and a HELOC. But then the banks started also tightening up yesterday on HELOCs, and we saw that market deteriorate quickly. We do still have another source for that. Georgia Banking Company is a reliable source. They've lowered their CLTV from 95% to 85%, which means you have to put 15% down instead of 5% down. But they're holding strong at the moment, as are our jumbo sources. But we don't know what tomorrow brings. We're kind of day to day. Believe it or not, there's been some rumblings around Ginnie Mae. Ginnie Mae equals FHA, and I don't think FHA is going to go away. But my sources have told me don't be surprised if you see FHA rates go up somewhat. FHA is a riskier product, so that's the theme here. Anything that's going to bring a little bit more risk is going to be on the table at the moment. Conventional loans, Fannie Mae, Freddie Mac, 80+% of what we do, and kind of the main thing that is in the marketplace is strong. Right. I don't think there's going to be any problems with that or see anything with Fannie or Freddie going away. It's backed by the government, and they're pouring everything into it right now. So that's a quick product update.
Yeah, it's obvious that our government is going quick to the rescue to undergird really the banks, right? They're doing everything in their power to make them feel confident and to ensure that they continue to make loans.
They really are. It's amazing, actually, the changes that we're seeing on a day-to-day basis and the flexibility and the solutions that are being offered. It's just as you said. A few other updates on the process itself. Lots of questions about that.
Yeah.
I'll give you a few examples of just what you were talking about how the industry is changing really in a positive way to adapt and be flexible to some of the problems that we're running up against. One is verifications of employment.
Yeah.
You may not know, of course, you know the documentation that a lender goes through, collecting tax returns, pay stubs, that sort of thing, W-2s. But lenders also have to do a verbal verification of employment the week before closing to make sure the person still works there, and kind of get some positive information. So that has been hard to get in touch with the right people for obvious reasons. So here's the flexibility that the industry's come up with, Fannie Mae and Freddie Mac. The policy now is within 10 days of closing, we still have to call. But if we can't get the right person on the phone, then we can still move forward if we get a most recent pay stub or an email from the employer that pay stub within the last couple weeks, or an email from the employer within the last 10 days, basically stating that they're still there. So that's really, really good news. I did want to point out that a special rule has popped up on self-employed borrowers. Self-employed borrowers, we have to get confirmation that their business remains operational.
What does that mean? What is operational?
Yeah, I know. And that really subjective. And that's the way it's worded. So that's going to be a very subjective analysis moving forward. But we're going to have to, an active license could do it. It could be something that simple. It's not like you necessarily have to show that you've got some receipts or invoices or closings in your case from the past week. It's not going to be that strict, but they are wanting an extra level of proof that self-employed business is operational. ATR, ability to repay, which is the big underlying premise of QM, qualified mortgages. It's going to remain a priority, and this could become a bigger deal as time goes by here. Basically, it's along the lines that if somebody has been temporarily laid off or furloughed, or they're not receiving active income, that's going to be a problem on a loan. So It really hasn't hurt us yet because that has not started showing up in the paperwork. But we can all only envision that the proof of ATR, the ability to repay, is probably going to be a bigger deal in the weeks ahead. Appraisal. Great news on appraisals this week. Great news. Basically, Fannie and Freddie came out and said that we could do drive-bys. So the appraisers didn't actually have to go in homes.
Not the kind of drive-bys that everybody's thinking, right? What's a drive-by?
It's an exterior only appraisal. It's where they do not have to go inside the house and do an interior inspection. So they can pull up to the house, take some pictures, go back to their computer and keep doing the work. It keeps them from going in houses. And that was starting to become a problem. We have 9 appraisers that serve Metro Atlanta for us, and we have very strong relationships with all of them. Aubrey interviewed me early in the week on Tuesday, and I mentioned to him that 7 of the 9 were still going in houses. Well, that turned into 1 of 9 within a couple of days for the obvious reason. I mean, none of us really want to be going in and out of houses all day, every day. So this is a really, really big deal. This was becoming a major concern. If this was going to be our stalling point and we were not going to be able to do appraisals, that's where the bottleneck was going to occur. So I've interviewed, I sent a survey out to our active appraisers, asking them a number of questions, trying to get a better feel for where they are, what their turnaround times are, how they're doing. I think they're real excited about this news. The turnaround times are still a week or two. Typically, we're a week or less. So know that they're just covered up right now, and it's going to take a little bit longer for that piece. But they weren't saying, hey, it's taken more than 2 weeks or 3 weeks, as I kind of feared that it might be. And keep in mind that this exception is for conventional only at the moment. We're optimistic and hopeful that other types of loans, FHA, jumbo, et cetera, will be more flexible. But I think a real big action point for realtors at this point is if an appraiser needs to get in a house, help them. I mean, work with them, make them comfortable. Talk to the homeowner and say, hey, the appraiser is going to come by. You help them schedule it and then get the homeowner out of the house. Get them in their car, have them go drive around town a little bit or wherever it's going to walk. Just get out of the house so that the appraiser it feels comfortable.
Well, it's
confident in the house.
What's funny with that, James, is I remember the days whenever, you'd take the lockbox off and you'd meet if you were the listing agent, you'd meet the appraiser out there, or, in the downturn, we would show up with coffee and donuts, right? I mean, it's like, here's the comps right here. I've tried to do your job for you. And most of the time they would take it. Sometimes they wouldn't, but we used to have a much stronger, tighter relationship with appraisers than I think we do right now.
Right. That's good words. I'll also mention something you may not know about. It's a PIW, a property inspection waiver. And it means that we can run a loan through the automated system, and there's the possibility of not having to do an appraisal at all. The industry has been allowing more of these over the last few years, and I'll admit maybe a lot more on refis than purchases, but we have seen it on purchases. There's a system that's picking up data, that's looking at a value, a price, and making a decision on if a waiver is satisfactory or if it's allowed in a particular situation. Fannie Mae and Freddie Mac have intentionally manipulated the software to loosen up a little bit on that. So we're anticipating that we will see more PIWs, waivers, where we don't even have to do an appraisal. Now, I realize if you're buying a house, you may want an appraisal done in more of a traditional market. But I'm thinking if any waivers we get at this point, everybody would be pretty excited about skipping that step.
Yeah. Wow, that's fascinating. What I love to hear as you're describing all this is it sounds like everybody is very solution based right now.
Absolutely. Totally are. I'm just have nothing but positive things to say. And that starts kind of small with us locally and goes bigger, all the way up to just the macro Fannie Mae and Freddie Mac and at that sort of scale. The decisions that are being made and the policies they're coming out with to keep us moving. Closings, we're hoping to get some more movement with this, but Fannie did express there is some flexibility on refinance closings where the buyer does not have to come into the office, to the closing attorney's office. Surely they'll loosen up and allow that to happen on purchases, but it hasn't happened yet.
Are you starting to see the refinance boom continue? Are people starting to say like, oh, how do I reduce? So I go from a 15 to a 30. Are you starting to see some of that pop up?
Absolutely. When rates started coming down a few weeks ago, definitely was a refi boom. Then rates raced up and then they came back down, but locked in a bunch of more people. I'm talking about the industry as a whole. And then rates went back up. They've come back down again this week. So there's a lot of refinances in the system. A lot of people that are saying, hey, maybe I can take a 30-year, I'm 5 years in, and maybe cut 10 years off and go to a 15-year. Other people want to just lower a payment. Other people possibly pull cash out. So we're doing a number of refinances when they make sense, but we are very much committed to prioritizing purchases. I think that's the main. I made a short list here of best practices moving forward that applies to us, to you, and to the buyers. And I'd start with that. Our role is to prioritize purchases and make sure that we can close any loan that or any transaction that you're bringing in within a realistic, reasonable time frame that you expect, which we are going to call that a month. And so we are committed to that. We're still able to do that. And I think it's also important that we follow through and do what we say we're going to do. And if there's some sort of change that comes about, because there probably will be, we just need to communicate it well. We need to communicate it quickly, even if it's bad news, and address it and deal with it and move on. In terms of what real estate agents can do, I think that writing clean contracts that have all the amendments, addendums, getting that to the loan officer, doing that and upfront, getting them exactly what they need is going to be a tremendous help. It's not the time to forget to send an addendum that doesn't get sent to the appraiser, that has the wrong sales price in it or something of that nature. Also make the appraisers feel welcome and comfortable going in houses when they need to, set realistic expectations with buyers and sellers on what's going on, and it might take a little bit longer. I think it makes sense to still put in 20, 21 days for an appraisal right now until these changes are digested. Maybe we fast forward a week or two and we can go back to 14 days, but I think it's smart to put 21 days in for an appraisal, maybe 25 days for an approval. We're still committed to that 28 to 30 days for a closing. As far as buyers, thorough pre-qualifications. Talk to the loan officer, submit an application, go the extra mile, and actually send in your documents, your income and asset documents. I can't tell you, in our industry, that is the hardest thing about our industry, is getting the right pieces of paper. I realize it's a PDF now, but getting the right documents that we need from the borrower. So helping with that is going to be huge.
How are you guys interfacing with the closing attorneys now? Is that is everybody playing nice in the sandbox? Are people getting frustrated? What's the status of your relationship now with closing attorneys? Has that changed?
Stronger than ever. Everybody's working together. It's a
Good.
thing of beauty. Even to apply it to this relationship, I've talked to Kern regularly throughout all of this, and she sends me little things, and she sent me a long proposal that we sent to legal for our parent company that was used to go directly to Fannie Mae and get an answer from Fannie Mae about the closing procedures that I mentioned. So that was some great leadership from her and from O'Kelly and Sorahan that was able to go all the way up to Fannie Mae and back to try to get some clarification on some things about how closing can be done moving forward. So kudos to them. Shout out to O'Kelly and Sorahan.
Love that. Certainly. In times like these, it makes you wonder, perhaps this brings back that idea of the virtual closing and the electronic signatures on loans. It sure would be cool if Fannie Mae would kind of get with the 21st century and consider that, right? If this actually could be the type of a crisis situation that makes them really rethink that.
I believe it will be. There's going to be a shift that happens on a lot of levels that comes out of this, and I believe that'll ultimately be one. And I think they're finding their way and considering things they haven't even considered before right now. So who knows what next week's update may bring?
Yeah, that's kind of all of us right now.
Yeah,
we're all rethinking everything that we've done.
Right.
That's great. Anything else that you want to share? That's fantastic. I'm sure everybody finds that interesting.
Hope so. That was kind of the latest and greatest from the last 24 to 48 hours.
Love it. Thanks for keeping us posted. So let's shift gears a little bit.
Okay.
Tell me a little bit about you. Where'd you grow up? Like, how did you find this lending business and get into this greater world of real estate? Like, tell me how you got here.
Okay. I grew up in Greenville, South Carolina. Yay. Andy and Leslie appreciate that with their Furman roots. Went to Travelers Rest High School, which is only about a mile from Furman. Met my wife there, so we were high school sweethearts. Grew up with my dad owning a steakhouse. He had the first steakhouse in Greenville County that he opened the year I was born in 1968.
Wow.
Western Sizzlin' Steakhouse on 291 over by McAllister Square.
Yeah.
So that was the business I was around growing up. He was very involved with the University of Georgia. He was very involved with the football program. So this was before NCAA rules changed. So he was kind of the head football recruiter for upstate South Carolina.
Wow.
And he was always right there in the middle of recruiting players that were from the Greenville, Spartanburg, Anderson area, something like that. He would go sign them literally on signing day. He'd be the representative from Georgia. I've gone through some of his stuff here. He died back in 2006, but it's recently going through some of his stuff, and it's neat to find some of the things and that he was a part of. But he went on to be a trustee for the University of Georgia as well. They changed the recruiting rules, so he wasn't able to treat players at the steakhouse and do some things that he had done previously. But
Allegedly.
So I really didn't have a choice. I went to Georgia because that's where he said that he would help me if I went. So it was really there wasn't much more to it, to be honest with you. So I was a bulldog from day one. I was a finance major at Georgia, went straight through, got my MBA, was a finance and corporate real estate major. So being in the mortgage business was kind of right up my alley, except coming out of school, it's not exactly what I had in mind. I envisioned working more at the traditional bank, going downtown Atlanta. First Atlanta was one of the biggest players in the market back then. I had a real good opportunity with them coming out of school that fell apart at the last minute. Or my whole career path would have been different because I was definitely going to take advantage of that. But for me, a defining moment was a conversation in the spring of coming out of school when I was contemplating all this. And it was with a guy that was 2 years older than me, a finance major. And he was listening to my vision for the future. And he said, "Hey, look, I did the first year coming out of school exactly what you're describing. And then I was able the second year to transition into the mortgage business." And he said, James, listen to me. Mortgage business it's a lot more fun. I get out of the office. I'm in control of my own destiny. I get to get out in the field and meet all these people. I help people with the most fulfilling transaction of their life. And I've got unlimited income. I'm making a lot more money.
Yeah.
And so he describes all this to me, and I'm like, okay. And he said, hey, we've got an office. He worked in Charlotte. We've got an office in Atlanta. I know the office manager. Go talk to him. So I went and talked to him. Sure enough, they offered me a job. I said, now, how does the pay work again? 100% commission. Okay, well, not so sure about that. So when all these other opportunities fell by the wayside, and 1991 was a recession year, so it was a little bit of a tough job market. I got in the mortgage business really out of default with Bank Boston Mortgage Corporation. And I was at Bank Boston 3 years. And during those 3 years, I had the opportunity to kind of get in good with a particular REMAX. It was a very interesting hearing Melba's story yesterday. And my roots are also very much in REMAX. It's where I spent 20 years really inside of a REMAX office. REMAX executives, North Druid Hills Road, right there at I-85. Another branch in Tucker. They had eventually one in Decatur. And how I really made it there is I had focused on that office and knew a lot of people in there, and they started talking to Shelter in 1994, if you can believe it. They started talking to Shelter about a joint venture, and they did one, and they said, hey, we need the best loan officer that we can find. Talking to the REMAX owners, do you know somebody? And they said, well, let us work on it. And they surveyed their agents. I was at the top of the list. They started with me, and they connected me with Richard Sissom. He's been a very important part of my story, certainly my mentor. He founded our company locally in 1993, and he was a class act, and it didn't take me but about 5 minutes to know that was a great fit for me. And so in June 1994, went to work for Shelter, and I've been there ever since, which is hard to believe because not many people in the mortgage business have been at the same place that long. But it's been a great ride. There's never been a reason for me to leave. We had a lot of success from 1994 to 2008. I'm going to kind of, cluster those years together. I'll say, Andy, that reading the Red Book, I without ever having read the Red Book, obviously at that point in my career, I applied a lot of the principles in terms of building a team and learning how to delegate and learning how to leverage and learning how to keep adding the right employee, whether they were a support person or a salesperson. And so I grew my team from just me in 94 over that 14-year period. Really, it turned out to be a 20-year period into an 8-person team. And we were able to have a lot of consistent success over those years. And I know you mentioned the shift earlier, and we were talking about it previously too, and that was extremely impactful on my career. And it's kind of like a line. It's kind of like, you can cluster 1994 to 2008 together, and then here comes 2008.
Yeah, we call that BS.
What a challenge
BS.
that was.
Before shift, right?
I lost your sound.
We call that BS. Can you hear me?
I can't. Can you hear me?
I can hear you. Yeah.
Okay. You're kind of cutting in and out.
Okay.
So if you can hear me, I'll keep charging. 2008 was a very difficult time. It really started in 2007. We started getting, I remember being at a manager's conference in the second half somewhere of 2007 and starting to get some signs. The initial tremors were coming in of some failings going on here and there. And that was the first time I ever realized something that was wrong. And by the time we made it to early 2008, the Fed was taking drastic action. It's kind of even funny to look back at some of it. Not funny, but it is interesting that interest rates, they were taking dramatic action to cut rates from like 6.25 to like 5 3/4. Those are the kind of numbers that we were talking about at that time. But my particular team, we never missed a beat. We refocused. The market changed. There was a massive shift. The bread and butter of what we did on a day-to-day basis changed. We had to figure out how to deal with short sales and repo departments and refis became important to us in helping our past customers. And I pulled up some numbers. Really, it was helpful for me to go back and look and even remind myself of some of this. But the team that I was running in 2006, we did 40 million. In 2007, we did 46 million. In 2008, really that year that began to transition, we did 49 million. And then 2009, we did 70 million.
Wow.
And then in 2010 and 11, we were able to sustain that between 50 and 60 million. So our business actually went up during the shift. And so some of that was because of refinances, but some of that was also, a lot of it was purchase business. In 2008, we had done 29 million in purchase business. 2009, we did 34 million. And then 31 million the next year, 35 million the next year. That was a healthy thing for me to go back and look up some of those numbers and remember how if you focus on the right things, what can come on the backside of that. So
Can you hear me now?
Barely.
Have you got me now? Okay.
Barely.
Well, it sounded like during the shift, you were taking market share. Is that right?
Absolutely.
Yeah.
And we by the time we made it to 2010, we were able to do it even to a greater degree. But absolutely, lenders were dropping like crazy. So for my team to go from 49 million to 70 million, without question, we were picking up market share.
Yeah, I want people to hear that regardless of what the market is doing, that there's still opportunities for you to take advantage, right? To get as Gary says, your unfair share of the market.
Right. Absolutely. So the KW begins to enter our story shortly thereafter. And so for the first time in my career, I'm a couple decades into my career at this point, and all I've really done is focus on my team. But I began to think outside my team and some of the opportunities that existed for our company. And there was one particular friend of mine who's a really key part of the story, and that's Sean Damon. Sean, of course, is the team leader in Decatur, and Sean and I'd done their loans in the 90s, way before he ever got into real estate. Did a purchase and then a refi and then another purchase and another refi for Sean and Tammy, and then they ended up getting into the business and working at Remax, and that friendship went to another level as a business friendship. But in 2010, the joint venture business was dead. And that had been our company's focus up until 2008, and it was dead. Real estate companies didn't have the cash to be able to enter into a joint venture. They weren't even considering these. But Sean was at Keller Williams Metro in Decatur. He was not the team leader at that time, but he mentioned to me that the lender that was in there at the time probably wasn't going to be in there by the end of the year. Now was the time for me to pursue this. So he put me in touch with the team leader, Christopher Bennett, and for the next 6 months, I worked it. And it was a long process just to get in the running. They had 6 lenders they interviewed. They kept narrowing it down. I did more presentations from this, and we won. And through that process, I met Rick Hale. And as we were awarded the Decatur office, literally as I'm walking out of the office, Rick says, "Hey, by the way, I've got another office about 10 minutes away. Would you be interested in that office?" And I was like, "Do you really?" Sure. He said, "Okay, well, come present to that office next week." So it's kind of ironic that for Decatur, it took me 6 months to make that one happen. And for the in-town office on North Avenue, it took 1 day for that one to happen. That's true.
Awesome.
But we were able to get in both of those offices at the end of 2010, and our KW success took off. We were able to eventually get in their Midtown office as well. And then about a year and a half later, something like that, we were doing really well in those offices, and they really appreciated us as a partner and the value that we brought. And so I'm driving down the road one day, and you know how you have those conversations that you just kind of you can remember where you were. I'm driving down Old Milton Parkway near 400. Again, I can tell you exactly where I was. And I got a call from Harry Hammond. And I knew Harry Hammond's name, just because I was in the KW world and would see some reports and OPs, but I'd never met him or spoken to him before. And he called me and he introduced himself, and he said, we've had an issue at one of our offices, the North Atlanta office, and we find ourselves without a lender partner right now, mortgage alliance partner, and understand y'all are doing some good work in town. Are you interested? And I said, absolutely, we're interested. And so he said, well, let's meet. So within a few days, I'm meeting with Harry at the North Atlanta building. I told you, Andy, earlier, up in that third floor on the boardroom, just me, a big old boardroom, just me and Harry. And that's the first time I ever met him. And we really hit it off.
Yeah.
And so I told him all about us, and it definitely was getting us in the running. And picking up on Melba's story yesterday, she mentioned Mark Spain a few times and how all that came together. Harry mentioned Mark Spain, and he said, confidentially, we're in the process where it looks like Mark's going to come over. And I said, wow, well, you know, my boss, Richard Sissom, he's actually good friends with Mark's parents, and they go way back. So we know Mark. And he's like, oh, wow. And so I boldly asked, what do you think about a meeting with me, you, and Mark to talk about this further? And I promise you, 7 days later, in the same room, me, Harry, and Mark were meeting, and Harry had made that happen. And Mark was he was coming on over to KW. He was all in, just like Melba said. Melba was coming too. And so Mark told us about his loan officer and introduced me to him. And so I started pursuing Daryl Edquist, and it all came together. We got in the running with Harry. I think he told me in the end he talked to 11 lenders.
Oh, I believe it.
Yeah, they were able to gradually narrow it down, and it kind of became a package deal. I was telling Daryl, hey, we're going to get this. And I was telling KW, we're going to get Daryl. And so I had it all kind of, working together to make it happen. But that was a huge day for us. That was a huge moment in time. And that led to picking up the consultant's office the next year. And then getting to know Mike Mulder and adding Chattahoochee North a year or two after that. And so we were very opportunistic. And 2010 was a bad year in the industry. It was a really bad year.
Yep.
But we got our butts out there and built some relationships. And we took advantage of the shift, if you will, and we're very opportunistic. And it's this relationship has really been the foundation of our company here a decade later.
Yeah, that's so cool. What a great story. Yeah, what I heard you saying is when the going got tough, you got going, right? You found a way to make something happen. And yeah, you're right. Look what it's turned into now.
Yeah.
And you've got some tremendous people that have come to work with you. How big is the company now?
Yeah, so we have 60 employees, about half in sales, half in support. Our support office is in Gwinnett. It's 85 at Indian Trail. Not many people working there right now, but we're proud of our little operations hub.
It's a great office.
We're in a number of real estate offices around town, and we still have these 6 Keller Williams offices, the 3 I mentioned in town and the 3 with you, and they really are the foundation of our business. We've been proud to recruit just superstar loan officers in each of the offices, people that we would never have been able to recruit if this opportunity didn't exist. Kathy Vitale coming over from Bank of America and bringing Tammy Mills with her. I mean, Kathy was a regional at Home Bank and just has an incredible reputation in the industry, as you know, just a class act. Jim Shue's been in the business for decades, and incredible opportunity for us to bring him over. Stanley Caldwell at Chattahoochee North. And we're excited at both of those offices that we've got some new loan officers to announce at each one of them. Matt Kugelin has just started at Chattahoochee North working with Stanley. He is a stud, and I hate that just as he got hired and got going, we weren't allowed to come in the office anymore, but look forward to everybody getting to see him and know him better. And at the North Atlanta office, Sonny Lazo is going to begin working with Jim Shue, and Luann Smith is also at Chattahoochee North, and Alec Jones is helping Kathy and Jim. We're trying to get 3 strong in each office, and once we get back in the office, you'll see their presence. But I think we're the strongest that we've ever been in the offices.
Yeah. So you're such a positive guy, and you've always got a smile on your face. I'm just curious, how do you stay so positive in, in stressful situations or potentially in times of negativity? How do you stay so positive?
Um, I think it starts with a miracle morning.
Mm,
And you'll remember the book that Michael Mayer and I think three or four guys wrote that one together. But I think that's where it all starts. Having a miracle morning. I remember that acronym SAVERS, and it's just about finding some time with yourself in the beginning of the day to read, to kind of fill yourself up. If you can't fill yourself up, then how are you going to give out to other people? I heard you mention the energy bus, John Gordon yesterday, and everybody needs to have be getting the John Gordon newsletter right now. Any of the books are fantastic, starting with the Energy Bus, and he's written one every year over the last decade, and they all are about positivity. And um, but that newsletter that comes out once or twice a week, just it reminds you of all the material that's in the books. And we all need to be reading it right now and staying positive. But we got to all fill ourselves up with the right stuff so that we can be able to give it out to others for sure.
yeah, love that. So what's next for you? What's the next challenge? What's the big goal? I mean, I know somebody just moved our cheese. And I was listening to, I listen to so many podcasts. I was actually listening to a Buffini podcast this morning on a walk, and he was talking about just getting comfortable with doing 12 months of work in 9 months. You guys are still pretty busy right now, right? Originating loans. But let's assume that maybe there's a little bit of a hole in that rope at some point. um, what's the next goal? Like, how do you recalculate, redirect, and cast a new vision for this year? What do you do?
Yeah, so we were really proud to hit our goal last year. We felt like it was a big goal, and it was 400 million, and we did 403, and we threw a massive party in early February. And so this year we set another just huge $500 million goal. So that's how we kicked off the year. Little did we know some of the crazy volume and things that would play out, that we're actually ahead of that right now. So that's just
Wow.
crazy. But we haven't had a whole lot of opportunity to really sit back and think about, contemplate those things yet, because I tell you, it's been kind of like the buildings burning down and bullets are flying every day, and we're doing everything we can to bring in the loans and get them closed, and the game's changing and how it's traditionally been played. And we're having to find these new solutions. So that's been a tremendous challenge. I mean, I was thinking about just my day yesterday. I basically spent the whole day talking to people and getting updates, trying to get the updates organized, and then ending the day with a call with our team at 4:30 for an hour, just going over all of it with them, and trying to keep them upbeat and positive, and hey, we can do this. But there's clearly a shift going on, and we don't know exactly what it's going to look like, but it's going to be real important that we have a plan and that we work the plan. That's what made my team, if we back up to 2008, 9, 10, 11, in that window, what made us so successful is that the blocking and tackling and doing the fundamentals, making the calls. First of all, showing up with a good attitude. It's easy right now to kind of get lazy and um, get your day off to a later start and watch the news and just, I mean, now's the time to get in early, to get going, to work harder than ever, to pick up some market share and prepare for what's on the back end. Have a plan and work the plan.
Yeah, I love that. I made a comment to somebody, maybe it was the team leaders. I've been doing a daily huddle 8 o'clock every morning with the team leaders, and you know, I get so fired up throughout the day. I mean, I have conversations like this. I'm on webinars, learning from other agents and leaders, and not just real estate, by the way, right? I'm interested in perspectives from all industries, because we're all going through this together. And then about 5 o'clock, 5:30, whenever I'm trying to start winding down, I'm curious, right, as to what's going on, like everybody else is, and I'll turn the news on, and I'll be darned if a whole day's worth of positivity can be ruined by 30 minutes of watching TV, right?
Yeah.
And I do believe we all have to stay informed. We have to educate ourselves. Matt Teeter yesterday on one of our calls said, you educate yourself not in the news, right? I wouldn't necessarily use the news, but go to the World Health Organization or go to the CDC, like get the updates, from really a statistical standpoint from them, and then let the sensationalism and the story that's being told on the news is really to get more eyeballs and sell more ads. So we just have to be really, really careful with that. And I think all of us, to your point, should put together a plan of what is it, what do we want to look like when we come out, right? What do we want? What knowledge do we want to acquire? Skill do we want to develop? And set a deadline for it, right? For us, a great example of this is we want to get into Command, our brand new platform, right, for Keller Williams. And we've been so busy, we've just been slow, dragging our feet to get into this thing. And Leslie and I both just said, enough. Like, that's the deadline. The end of the month is the deadline. What do we need to do in order to make that happen? So I think all of us have to kind of back up, take a look at those goals that we set beginning of the year. What is it that we said we wanted that, because we've been so busy, we haven't really focused on, and really reevaluate it. What is it that we want? And how are we going to use this time to help us get closer to it?
Yeah, completely agree with that. This is a great time to make some progress on some things we can't traditionally get to, and we need to make the most of every day. I think we need to take this one day at a time. It's real important we take this one day at a time and give our best to every day, whatever that means. And doesn't mean just work. That might mean also giving your best to your family, and but some of the distractions that we normally have in our lives, or even the commutes that we have, or the traveling around, some of those things have been removed. It's a fantastic opportunity for us to take advantage of that and make the most of every day, with both work and your families.
Yeah. Well, I'm really encouraged and thankful. I've said this before, I'll say it again. In times like these, I'm even more thankful to be in business with people like you. So thank you for giving of your time and of your people. You've got tremendous people. We've also told the agents, and I want to remind everybody that really in these situations, this is not the time to go fly by night. And lenders and attorneys, like, you really need people that that and that you trust and are going to do the right thing and take care of your clients. It's requiring a lot more patience. I can only imagine on your end, just like it is on ours. And if I got to be in the foxhole with somebody, I sure as heck want to know who they are, right?
Yeah.
So yeah, we should become closer as a result of this. I would hope so, at least.
Well, thank you for saying that. We're so grateful for your leadership, Andy, and the leadership you're doing right now, and leading these sorts of interviews. And the ones that I've heard this week is you're just going the extra mile and telling everybody what they need to be doing, and staying focused on the positive, and it's going to get us through it. So we can't tell you how much we appreciate your partnership, and the relationship we have at your three offices is the foundation of our business, and we're extremely proud of it. And we want to do everything we can to be there for you guys. We're trying to carve out space in our pipelines to make sure we can still close your purchases. So we're here for you.
Thanks, man. I really appreciate that. You guys be well, and I hope to see you sometime soon. We'll social distance, but I hope to see you soon.
Thanks, Andy.
All right, man. Take care. Thanks again.